Tim Romero with Romero Retirement Strategies. I want to talk a little bit about annuities. Now, annuities are probably the most misunderstood, mischaracterized financial tools we have available today. The main thing about annuities is that the word doesn't mean the same thing every time you speak it or hear it or read about it. The word is not universal. An annuity is simply a guaranteed insurance contract. You give your money to the insurance company in the form of premiums, and the insurance company agrees to give it back to you at a date in the future, plus any interest or returns as stipulated in the contract. Now, there are two basic types of annuities. The first is called a variable annuity, and as its name implies, it can vary. You can place your money into a fixed guaranteed account, but the only reason you want a variable annuity is so that you can also put your money into stock market-based security accounts, which means in addition to being able to potentially earn a lot of money, a lot of returns, you can also lose some or most of your money to a negative market. They've been pretty popular over the years, but lately they've started to kind of trend down. And because you can lose some or most of your principal, variable annuities are not part of a safe money strategy. And that's why I don't offer them. Now, the second type of annuity is called a fixed annuity. A fixed annuity credits its interest based on a fixed rate, declared and guaranteed by the insurance company each crediting period. You can never lose any of your principal to negative market downturns because your money is never placed in the market. None of your principal is ever at risk. One of the most popular types of fixed annuities is one called a fixed indexed annuity. Now, in addition to the fixed rate account, you can also allocate your money into one of several accounts which credit interest based on a particular stock market index, usually the S&P 500 or some variance of the S&P 500. But because your money is never in the market, unlike a variable annuity, your principal is always 100% protected from market losses. You can never lose any of your hard-earned savings to the market. Now, because you can change how your interest is credited every anniversary period, and because the market is pretty much secular, in other words, over the last 25 years, there's been a consistent ratio between the good years and the bad years. That means that a fixed indexed annuity owner has a realistic opportunity to achieve better than average returns. And some of the newest strategies available today are showing potential gains considerably higher than traditional strategies. And that's the great thing about annuities. They've been around for thousands of years, and over that time they have constantly changed, constantly evolved to new and changing economies and financial needs. Now would be a good time to talk about a few of those misconceptions. Some of them may have been true at some point, but remember, annuities are always evolving, always getting better. Misconception number one. When you buy an annuity, the insurance company locks up your money forever with strict restrictions. Well, maybe in the past, but today most annuities have declared surrender periods, usually between 5 and 10 years. After the surrender period, you have 100% access to your money. And for the most part, just about all companies offering annuities allow the owners to access between 5 and 10% of their annuity's value after the first year without any surrender penalties or fees. Misconception number two. When you die, the insurance company keeps your money. Well, that could happen if you annuitize your annuity. And what we mean by annuitize, when you're ready to get, in the old days, when you're ready to get a lifetime income, You annuitize it. The insurance company would cut off its growth. They would make you choose how you wanted to be paid. There was no going back on that, no flexibility. And if you chose the wrong payoff option, it's possible that you could leave some of your money with the insurance company when you died. But today, for most annuities, you can add a rider which guarantees you a lifetime income and allows your annuity to continue to grow even as you're taking that income. And when you pass away, any money left in your account goes to your beneficiaries, no matter how long you've been taking that income. Misconception number 3. The returns on annuities are so small that you can't keep up with inflation. Well, today there are annuity choices which allow you so many different ways to earn interest that over the long haul, you have the potential to even keep up with a market-based strategy. Now, some of these new strategies are uncapped. In other words, they don't put a ceiling on how much gain you can receive. Even the fixed interest rates are paying interest many times greater than CDs. Today's annuities are not the same as your father's annuities. And you know what? Your father's annuities were not the same as his father's annuities. Annuities are ever changing, ever evolving to keep up with the realities of the financial needs of the consumers and the age in which they're presented. Let's talk about it again. One more time, cover the high points. You can never lose any of your principal, never. There's no cap on how much you can earn on many different annuities. All gains are locked in and become part of your principal every year. Guaranteed lifetime income streams, continued growth even as you're taking income, all of your money passing to your beneficiaries, and those claims are filed outside of probate, which means that your beneficiaries can access that money much faster than they could through the bank accounts or brokerage accounts. And here's one of the best ones. On all non-IRA annuities, the money that grows tax deferred. In other words, you're never taxed until you take the money out. So you get to earn interest on the taxes that you would have paid. That's pretty dadgum good. Are annuities right for everybody? You know, I've always said that I believe that annuities are not for everyone, but everyone needs to know about them and have factual information about them to make informed decisions regarding their financial securities. Can today's annuities fit into your safe money retirement strategies? Hey, call our office, 722-6739, or check out our website at SaveMySecureRetirement.com. I promise you this, there'll be no pressure, just information. It could be the best decision you make, because remember, the market's like a roller coaster. One day it's up. Today, it could be way, way down. Call our office, 409-722-6739.